Good evening, everybody. A very warm welcome to this CoreLedger webinar. My name is Samuel Miller. I work with the marketing and sales teams here at CoreLedger, and I will be introducing today's event. We'll be continuing the theme from our last webinar on DeFi by discussing the future of blockchain, a technology that's often struggled for its own identity outside of specific applications like cryptocurrency. As we've discussed before, cryptocurrency speculation throughout the ICO era, and now with the DeFi craze, has left much of the world associating blockchain technology with these high risk and sometimes fraudulent speculative schemes. But we see blockchain as a tool with much more potential, and so that's what today's webinar is all about. Our agenda today will be as follows. In just a moment, CoreLedger's co-founder and CEO, Johannes Schweifer, will start the presentation by breaking down what speculation looks like in the context of blockchain and cryptocurrencies. Then he'll discuss what it really means to put money to work and round out that conversation with some non-speculative examples. After that, we'll have some time for discussion. So if you have any questions, comments, or discussion points, you'll see a Q&A button on the left side of your screen. If you just click on that, you can type in your questions, and at the end, we'll do our very best to answer them. So that's it from me. I will now pass the mic off to Johannes.
So, good evening, everyone. My name is Johannes Schweifer, and I'm actually a chemist. I started as a consultant for customer relationship management systems and became co-founder of Bitcoin Swiss in 2013, and also co-founder of CoreLedger. And CoreLedger actually strives to put blockchain to productive use apart from speculative use cases. Today, I'm actually walking a fine line because my previous occupation as co-founder of Bitcoin Swiss was actually dedicated to some form of speculation. Nonetheless, I want to give you an introduction in general, because I'm a scientist, how to distinguish the speculative from the non-speculative use cases before moving into how to apply blockchain for the latter. First of all, there is one of the oldest desires of mankind, which is how to get rich quickly. That's kind of natural, and actually there is nothing wrong with it. It's just a matter of how to get there. So one of those possible answers is, of course, work hard, save money. That's not too much likely today and in today's environment. So the chances to get really rich, other than just making a survival and a living, is hardly possible. So what else? What else is possible? You can invent something and work hard, or you can found a business, create a company, work hard, and run a profitable business. All that doesn't really sound too much appealing to the usual human mind and human nature. So there's an alternative, which is winning the lottery. And that gets pretty much every fellow interested. And one of those things which made blockchain and Bitcoin and especially very attractive was the fact that this was pretty easy. So for blockchain use cases, the very first one, there was only one available, which is investing money and at some point taking that money out. But if you took the magnifying glass, looking deeply into where the money came from, it quickly revealed that the lucky investor got his money from the not so lucky and not so fortunate individuals who just invested at the very wrong time. There's a meme which has been quite popular and is still quite popular with a lot of different projects, which is this "come on, do something" meme. You might be familiar with it. It's focused on the fact that most tokens, and also Bitcoin in the very beginning and mostly up to now, does not really have any big purpose apart from buying it and selling it later, hopefully at a higher price. So these tokens, these blockchain use cases did not give any access to anything else but speculation. So the very likely thing that happened was that after many more of these kinds of tokens, Bitcoin copycats or more elaborate projects such as Ethereum were created. There was a run towards those tokens. And although Ethereum was one of the more successful ones, honestly, the most successful in the entire history, and not because of the price, but because of what they achieved. There were a lot of copycats and a lot of projects that followed with less and less purpose. And of course, the inevitable happened. I don't want to talk too much about ICOs and the failures made back then, just about motivation. Blockchain, of course, was extremely tempting as a speculative use case. Why is that? You can invest really little money. So even fractions of dollars would already be able to be put to work. So for the early Ethereum investments, you could really put a couple of dollars into it and see it grow to a couple of $100 after a mere month. It can start entirely with Bitcoin, and there are a lot of different ways to get Bitcoin, such as getting them from ATMs or brokers for a very long time. And still up to today, local Bitcoins is quite popular, although banned in most countries. So you could obtain your Bitcoin pretty easily. And once you're in, you're in. So you need no banks anymore. You need no intermediaries to invest. You could simply convert Bitcoin into Ether and use the Ether for speculation. That was simple and still is. And usually there was and still is no governance and no control. So it's not necessarily a bad thing, but it could be exploited, of course, and then it turns into evil. And one thing that blockchain made possible altogether was that it just doesn't need any counterparty trust. So the transaction, or let's say the transfer between one party and the other, that needed no trust. So either you got it or you didn't get it, but at least you could employ some forms of atomic swaps to make sure that for whatever you invested, you got something in return. That's one of the benefits of blockchain, and applied properly, it created trust where in most cases no trust should have been granted. So fraud which happened on a more fundamental level, like on the project level itself, not on the level of transactions between individual parties. And although many of those projects failed, apparently there was no learning for whatever reason, because projects kept being created, and the usual saying, but this time it will work, is still prevalent. So as a scientist, I'm tempted to just define how models look like. And in a very simple manner, a speculative model just looks like this. You have two parties, you have the market and you have investors, and there is nothing in between. So there's no added value generated. Let's now jump to the whole purpose of this webinar today. I'm frequently asked to give non-monetary, or at least non-speculative use cases as examples. So that's what I'm going to do. Adding purpose to blockchain means that you, of course, have people entering a system and leaving that system, but in between, there's something which is created, some value. So whatever it might be, but it involves blockchain, it does something, and value is created. So what models can be applied? On the one hand, there is a model which does not need money at all. So completely non-monetary models which use blockchain as a tool as it is. Or the money does something. Let's focus on the latter, how to make money work. Adding purpose to money means that you have a certain cycle, a certain mechanism, which puts that money to use in the real world, either by investing it into real assets and storing them. The very simplest form would be an asset-backed token, but that's kind of primitive. What I mean is investing it in real economy. Like in this, having vendors and suppliers, having customers, generating revenue, paying salaries, having employees, doing something which generates profit, and afterwards sharing that profit. So the simplest form in the upper left corner is having some forms of investment. Sure, crowdfunding is one good example and doesn't exactly need blockchain for that purpose. So crowdfunding is, I think, not necessary to be explained in detail. Enabling projects in the spirit of early ICOs. That was something which is indeed more than just speculation. Because, for example, Ethereum would not have been possible without the early investments. It swallowed a lot of money for first the regulatory approvals, second for generating the entire blockchain project, for keeping the team together, for simply funding all activities which were necessary in order to launch such a global project. And that is true with a lot of those early blockchain projects and also some of the latter ones. So investment into projects, whether they are blockchain projects or just something in the real economy, doesn't matter. This money has been put to work and can be deemed investment. Of course, liquidity is another topic. So we have seen examples of revenue share tokens where real business models, you might be familiar with the Finca token, that is a cattle ranch, which is tokenized, where the investors get a share of the revenue. That such models are based and are anchored in real commodities or real assets, such as a cattle ranch. There are more examples. For example, real estate could also be tokenized in that form, and investors get a revenue share. Trade finance. In trade finance, you mostly need a lot of liquidity in advance before purchasing or before being able to trade something to your counterparty. Those funding, this amount of money normally needs banks, but by using blockchain, you can avoid banks. So having investors backing such invoices, backing such trade finance models allows you to be cheaper, to avoid extra costs, and just to pay out something to your investors. Microloans, another topic, not really something which is appealing for banks simply because of the term micro. And in some countries, it's even not possible to get a loan at all, but it's possible with cryptocurrencies. This is money, or let's say this is value which is put to use for some purpose, not just speculative. Furthermore, it stays at the same valuation. So the money being granted as a loan has approximately the same value as the money which is paid back. So there is not even any purpose or any incentive for big speculation. Disintermediation in the upper right corner, that's one of those, the quotes, disruptive topics of today. So remittance, you could use cryptocurrencies or tokens in general in order to send money from one place to another place. That bypasses the usual processes, for example, avoiding SWIFT. So you could use the protocol of a blockchain in order to just transfer value, avoiding correspondence banking principles. And as long as the check-in and check-out points at the various ends are secured, there is an improvement for the users. So it's mostly immediate payment or immediate remittance and no intermediaries involved, or micropayments. So stable coins, not exactly at the moment Bitcoin due to high transfer costs and also not Ether, but other cryptocurrencies or even stable coins could be used for that purpose. So as long as transfer fees are low, micropayments are more useful and more economic than doing it through a bank. Furthermore, certain micropayments just do not work when being tried through a bank. So a bank might refuse sending a couple of Swiss francs to a destination somewhere in Southeast Asia. And the last example there is financial inclusion. And that's one of the more social achievements of blockchain. So there are still about 1 billion of people worldwide which are just unbanked. Billion adults, I have to add. And they simply don't have access to any banking service at all, will never have. So giving them access to some form of digital payment, and here I have to admit it doesn't necessarily have to be blockchain, but that's one of the potential solutions, gives them access to forms of transfer of value. And the last example there, although the list is longer, is being able to invest in assets which are otherwise too costly to invest as a whole. The shares, there's equity, which are extremely expensive. So you could never, ever even buy one of those shares being in one of those countries where the average wage is not enough, that you have enough savings for such titles. But with blockchain, it's possible to fragment these assets, and it's possible to invest in fragments. So these are possible still financial use cases where you use money, but money works in these cases. More interesting are the non-monetary use cases, to be honest. So what means non-monetary? Non-monetary means using blockchain as a tool, as it is. Blockchain has never been meant as a product as such, although the earliest implementation of blockchain, Bitcoin, was such a product. But blockchain per se has a lot of advantages, which can be integrated and implemented in certain products. So what can blockchain do? It basically prevents double spending. That means not only a monetary aspect, but also in terms of identifying objects. So if one token identifies a certain object, double spending prevents that you can simply double or multiply that object. You can avoid the intermediary. You can put something into the blockchain and avoid that history is altered. So data is preserved and forge proof preserved. And again, you need no counterparty trust. So transactions, whatever it be, does not need any intermediary and any trust in order to make the transaction work. Everything which is put into a blockchain, as long as it's public, sure, is globally available and globally in sync. And the last thing, you can put programming logic, not in all blockchains, but in most, and put that logic to use. For switching to examples, one of the most widely used case is the case of storing data. So exploiting the feature of tamper-proof records in blockchain. So you might be familiar with the fact that blockchain is not necessarily a very inexpensive store of data. To be honest, it's a very bad store of data. So only tiny amounts can be stored there. But that's not necessary. So you can store data wherever you want. The most important thing is that you can reliably create something called a fingerprint or a hash. And that's a pretty short value. A string consisting mostly of something like 32 bytes that can be put into blockchain. And what's the advantage of it? As long as you have at least one authentic copy somewhere, so it can even be stored decentrally, you can always prove, that's the important thing, you can always prove the authenticity of a certain document. So be it some notarized document, be it a marriage certificate or something, as long as this fingerprint, which is derived by the document which you show, matches the fingerprint which is stored in the blockchain, you can prove that the document which you have is authentic without needing any third party to prove the authenticity. The third party is the blockchain. And that's essentially the basis of all non-monetary use cases. So what can you use them for? First of all, you can put permissions into the blockchain using tokens as access tokens. An example might be the case of Ambitorio. They create a network of peer-to-peer encrypted documents, and the token which you obtain allows you to decrypt and download the document. And it's bound to the token. Without the token, you don't get the document. And that is a very straightforward case of access rights implementation on blockchain. You can use it for vouchers. You might be familiar with vouchers which grant you access to the internet in hotels. The same thing could be used or could be implemented with tokens on blockchain. And it has the advantage that such things can be reloaded. It can be prevented that they are reused and so forth. So vouchers is a very rich area. You can implement smart locks, combining transactions, whatever they might be, like an unlocking process on blockchain with an action in the real world, like unlocking a lock in a hotel, or as we had as a previous use case on a bike. So you can unlock a bike stand and release release your bike and can use it again. You can use the blockchain and tokens as storage certificates. So you bring real assets into a storage facility, and what you get in return could be a paper, of course, but you could replace that paper with a token, and the token grants you the right to reclaim the real asset once you come back and, well, reclaim it for redemption. That's permissions. The notarization part, the one which is mostly and entirely about documentation, involves storing certificates of education, for example, graduations, like PhD certifications and master documents and so forth. You can put proof of origin records into the blockchain, like where does a certain product come from? Is it authentic? Has it been created in a, let's say, in an organic fashion, if it's about food, or if it's a delicate metal like diamonds or other gems, have they been mined in a nice way or not? So that is something you can use blockchain for. And already as early as in 2013 or 14, there were the first projects employing this feature for such projects. You can put a land registry into the blockchain, or annual reports, statements of companies. You can, of course, also put audits there. So basically all forms of documents, such as a shareholder's ledger, anything which needs and employs the forge-proof properties of blockchain. Third examples are substitutes for money. So instead of using and sending money across the globe, you could use asset-backed tokens. For example, having certificates, tokens, granting you the right to claim a certain amount of gold or commodities or other things. And these things exist in reality. Such cases can always be combined with the documentation case / notarization case, where you also need certification or audits that the real asset is really there. You can create barter economies on that basis. So exchange commodities for each other, like trading copper for iron ore without any money in between. You can use it to create social credits and trade those social credits. Of course, all these things might involve money in a earlier or later stage, perhaps. But the main purpose is, of course, around the primary case, like the asset which backs the token. And the last thing is custom logic. I mentioned before that one of those properties and features of blockchain is that it can run so-called smart contracts programs on blockchain, which are totally unbiased, of course, unless there's a bug. So custom logic might be the enforcement of shareholder agreements. There is no maybe with certain articles. So if shareholder agreement articles are being coded into smart contracts on blockchain, and if there is an enforcement that all transfers of shares have to involve that smart contract on blockchain, there is an absolute guarantee that these articles encoded in the smart contract will be invoked and enforced. As I said, no maybe or any bias in between. You can put supply chain logic on it, trading one asset against another. And last but not least, you can put voting processes, real entire democracies, if you want to do so, on blockchain, enabling people to vote and cast their vote on chain. That could involve also certain, let's say, more delicate aspects, like what gives you the right to vote Is it maybe based on social credits or other things? So a rich possibility of tools which can be employed on blockchain. So to summarize, there are two ways how to use blockchain without any speculative purpose in mind. The non-monetary cases, just bypassing the necessity to just have money involved by using real values or using properties of blockchain which have nothing to do with the money conversion aspect, or having an investment which pays off at the end, which powers the real economy in some form and yields a profit, which is the basis for your investment appreciation. So thank you very much for your attention. And if you have any questions, I'm happy to answer them.
All right, thank you very much, Hannes. So we do have a few questions. Just a reminder to everyone, if you'd like to contribute anything, just click on the Q&A button on the left side of your screen and you can type in your addition. So first up, Hannes, you mentioned crowdfunding earlier in the presentation, but that doesn't need blockchain. So why would you consider it a use case?
Well, I said before, it's I'm walking a fine line there. Practically, crowdfunding doesn't have to be put on blockchain, but it can be. In fact, all the ICOs were some form of crowdfunding. So it's just a convenient way to use a tool in order to speed up certain processes, to automate certain processes and avoid manual labor in between. So that's just one potential use case. Adding that most use cases I've presented, except for those which employ certain, let's say, unique features of blockchain, can run without blockchain, of course. So only if there is an added benefit, added value, like saving of money or making things simpler or whatever, then it makes sense to employ blockchain. So in the case of crowdfunding, there is the advantage that you could, for example, crowdfund a project which by itself yields certain access tokens, utility tokens. So that's what can be done on blockchain. Therefore, it's mentioned here.
All right. Next question is about cryptocurrencies. So can you just clarify, are Bitcoin or stable coins considered speculative, or do they have a purpose?
Well, Bitcoin as well as stable coins, they have can have an added value or an additional purpose, for example, in the case of remittance. So if you use Bitcoin to transmit values from point A to point B, using it just as a carrier or transport layer for values, then it has nothing to do with speculation. And mentioning stable coins, there is not much speculative advantage in buying stable coins, simply because we always measure value against some fiat currencies. So with a stable coin, that value is constant. So that's definitely not a speculative case.
Okay. Will quantum computing affect blockchain's use cases or its immutability?
Well, at the long run, maybe it will, but first of all, there are more, let's say, the advantage of a quantum computer is that it could attack the safety and security of private keys. And if you calculate that through, the only attack vector is trying out many possible combinations in a very short time. But even a speed up in terms of quadrillions does not make the computation time anywhere shorter. I recently calculated that for a project, and it was about 60 times the age of the universe in order to calculate it with normal means. So if you speed that up, not 60 times, 10 to the power of 60. So if you speed that up by a factor of, I don't know, 10 to the power of 10 or 10 to the power of 12, whatever. So what remains is still too much. So it's hard to attack private keys in a straightforward brute force manner by quantum computing. I expect, however, that it's possible to shortcut certain algorithms in the long run, but also there, even without the brute force attack possibilities, everyone who wants to protect safety of blockchain can also employ quantum computing for that purpose. So then the technical possibilities are even again, and there is not too much advantage left with a quantum computer.
All right. Next, we have a use case question. What about non-fungible tokens for software licensing as a shared ownership or timeshare in proof of purchase?
Non-fungible tokens, that sounds like a valid use case, which is either non-monetary or at least definitely non-speculative. Or are we talking about use cases like CryptoKitties? That per se was, to be honest, a cool use case, except for the part where people started to speculate with those tokens. Then it became somewhat awkward. But until then, the propagation of properties on blockchain and that kind of evolutionary algorithm was, at least for me as a scientist, quite interesting.
All right.
I hope I answered the question. Samuel, did I answer the question?
Well, if you didn't, welcome to get in touch with us. I think that's all the questions we actually have time for today. So I want to thank everyone again for joining us. If you do have any more questions, or if you didn't answer something properly, or if you just like to get in touch with us, you can do so very easily through our website, and we would love to hear from you. As always, we're also on social media, so please do follow us on LinkedIn, Twitter, and Facebook. We're also at Medium, where you'll find monthly articles on topics of blockchain and tokenization. We're also on YouTube, which is where you'll find a recording of this webinar within the next 24 hours or so, just in case you want to refer back to it, as well as past recordings from our previous webinars. So that's all the time we have for today. Thank you again for participating. Hope you stay safe, and we'd love to see you at the next webinar.